Hello everybody, welcome back. Let's have a look at Bitcoin to begin with, and a bit of an overview of the markets. Obviously it's the weekend, so there is no stocks, which is good because they closed alright. We'll have a look at that in a little bit. So we broke out of this resistance here, which is quite nice. We've been here for the most part of the week. It's 95,500. We broke out of there, and now we're looking probably coming down for a retest on that area over the weekend, maybe just over the next few hours really. Hopefully from there we get a bounce that will take us in towards 99, 100, 101. Yeah, this is the kind of area I'll be looking to see a resistance from, the next big resistance. Now, we are sort of spoilt with bearish divergence, or have been, and with that comes the idea that when we do move up, well, if we do continue with this bear div, then we'll come down again. So I'm not looking for new all-time highs on this quite yet, really, but we'll have to take it day by day. The daily's the same. We've got the 7 simple moving average at this support. We've got the 10 exponential down at 94, and obviously if we do lose all these areas, it's still not the end of the world. We can see 91,000 if we have to. You know, it feels like a long time ago now, doesn't it, that we're down at these areas. It does feel like that, but who told you that we were likely to break out? I told you when we had the Golden Cross retest. Take this and run with it. I've still got that long on at the moment, so things are looking quite good generally. And even if we were to come back down to 91, maybe even a little lower, below 90, it still would be okay. This bearish divergence might lead to that, and if it does happen, it'd still be a high low. So don't worry, but at the moment, I'm looking for a retest of this area today, and then a bounce and possibly a move into this area. So that is the Bitcoin scenario. Okay, that is the Bitcoin scenario. Let's have a think about the S&P. So the S&P had the Golden Cross, simple and exponential on the 4-hourly. So we ended up with a 1.8% move up yesterday. Now there was a fair bit of stuff going on in the world, you know, financial news, which allowed for that continuation of the rally, but similar to Bitcoin, probably even worse. We've got multiple drives, bearish divergence. The money flow index on the 4-hourly is now at 78, which obviously is not huge, but it's getting a little uncomfortable up there. The daily is at 85. Now we've broken above this area, haven't we? And we're into the box, the resistance box. The top of the box is 5,760. We could easily get up there. Good. And if we break above there and close above there, still building a base above there, then maybe we continue. But 2 drives, hidden bearish divergence, relatively hot money flow index read. Kind of is what it is. But because it closed this way, we might be looking for the crypto market to at least have a decent Saturday, maybe even the first part of Sunday before it starts to reconsider where it wants to open on Monday. The weekly for the S&P also highlights the top of this box as where the 20 weekly moving average is. Always an area to be concerned about, just as you'd be optimistic as you come down to approach it when you're above it. Simple Bollinger Band strategy applies. When above it, you're more likely to remain above it. Boosh, more likely to remain above it. More likely to remain above it. East, more likely to remain above it. When below it, more likely to remain below it. Boof, more likely to remain below it. Get the point across? Again, it's only 65% chance of a rejection, but it is still more likely, so you have to go with the odds, or you have to respect the odds even if you're not going to go with them. So that is that. Right, a bit of a look at some of these other things. So Ethereum trying its best. Support on the 7 simple. You get above there, fine. That's one thing you could be reasonably excited about. Center of the Bollinger Band, again, more likely to remain above it. It gives you support of 1,721. This is a death cross retest on the daily, and we've seen all this on these other charts before. So again, resistance, support, resistance, support. Looks like an ascending triangle formation if you're to extend these moving averages, which is more bullish than bearish, but we'll have to wait and see, because again, Ethereum is weak as hell and does require the rest of the market to allow for it to try and dig itself out of this ditch. There's a good chance it does, but there's so much to make up on that we probably are just looking for lower highs on this one. Now, the Golden Cross, which technically was already retested, I suppose, or maybe it was tested before, whichever way you want to look at it. If we do want to come down to it again, 1,779, Golden cross retest, more likely to have a V-shaped recovery out of that, just like what we saw with Bitcoin, when we took that position, or I told people that this is the place to go, bang, up. We see this across the board with lots of charts, and they're all doing these sort of things. Golden cross on XRP, support down here, 218. You take your pick. They'll all be at it. They're all more or less forming it. Obviously, Bitcoin is the better chart. What else have we got? EOS. I bet you've gone. EOS is an even better example. Golden cross retest, V-shaped recovery, continuation. So, it's not bad for altcoins. Altcoins have their setups, and their setups generally look okay for, some of them, not all of them. This is why you should join a Patreon, guys. So you don't just hear someone say, altcoins look good. Which one? There's only about 25 million of them to choose from. Altcoins, put them all in the same bag. Don't put them all in the same bag. They're all very separate individual charts with different setups, some better than others, some terrible. So when I say altcoins, obviously I don't mean every single one, but as a group, the ones that I look at seem to be okay. But they are only altcoins, and they will move through association with Bitcoin, who moves through association with the S&P, who basically is pushing into, and is already at, basically, major resistance with bearish divergence across many time frames. So you do have to think about what it is that you're going to do when you're presented with a setup like that. We've got a bullish chart that's governed by a bearish chart. Right, okay. Optimism is fine. Being reckless, not so fine. So I like the way that things look, but I am also very cautious that when we approach these, we already are, but when we approach this top area here, it's better to be safe than sorry. I mean, we saw a little bit of a reaction on the 200 exponential on the S&P, didn't we, yesterday, but it was all bought back up, so, fine, absolutely fine. There is still, do you want to call it demand, or just attempts to keep pushing it higher, and so far it has worked. There is still opportunity from a lower area, which is down here, 5,500 is opportunity down there. So, short, long, sell, buy. It's kind of that simple in a way, but it's certainly not buy, sell. It's just be careful around these areas. It's been the same now for a little while, as we were expecting at least the dead cat bounce to take us up into this area, and now here we are. S&P has bounced the tune of 18%. That is normally more than as expected for a year's worth of S&P. So the S&P over the space of 4 weeks has done its standard. You're generally expecting to see year on year about 16% on the S&P. Then that's just an overview of what it would be like to hold the S&P for a very long period of time. It works out roughly around 16% every year, and we've done over 18% in 4 weeks. So for a lot of people out there, that has been a beast, and that is a year's worth of gains on the S&P in a 4-week period. So might be time to take some profit. Gold, I believe, is profit taking to the max. You need to think about this, because you can look at this in two ways. You can think, is Bitcoin correlated with gold? Well, I don't think it is. Look at the state of it. That is not a Bitcoin chart, is it? That's a gold chart. That's a Bitcoin chart, and that is a gold chart. And they are, structurally very different. Now, this is overheated to the max. Now, something you can think about is that, all right, if it's not correlated, what does that mean? Well, it might mean you could have a rotation. Imagine if you were in on gold, right? You've been on gold for a little while. You've made a lot of money, and now it's time to realise some of those gains. It looks like people are realising them by the state of this wick, and why not? This is where the pool of money is at its peak, so you want to take some of that money out, realise some of that cash. Now you've got cash. What are you going to do with it? I'll tell you what you don't want to do with it. Shove it in the dollar, really. I mean, the dollar has come down to major support, but it's still a bearish as hell chart. Do you want to hold on to cash in this environment? Is cash a great idea to hold on to? Or do you want to find a home for it? Where are you going to put it? Where's it going to live? Well, probably not oil either. Stocks? Perhaps not. I don't know about you, but if I'm coming out of gold, I don't feel like going into stocks, really. There was a few individual ones that we saw on the Patreon live stream on Wednesday that actually were pretty good. But for the most part, they all look like the S&P, and they're all approaching resistance. So, all right, I've got gold is gold money. I don't want dollars. I don't really want stocks. What am I going to do with my money? Maybe, since I've reclaimed the 20 moving average on the on the weekly here for Bitcoin, maybe we're setting up for the next stage of the rally. I've been in gold for 18 months. Maybe I can handle being in Bitcoin for another 4 or 5. I could handle that. For what? What am I looking at? What kind of gains am I looking at? Perhaps, 30%? Perhaps maybe 50%? What am I looking at? Well, a home for my cash. Okay, I'll take the risk. Rotation from one into another, into another, into another is the nature of most traditional markets. There's only so much money in the world, and it's always moving, and it needs to find a home, and cash might not be a great place. Stocks might not be a great place. Crypto might not be a good place, but out of all the charts that we generally look at, Bitcoin looks the most appealing, with gold overheated, stocks below the 20, and obviously the dollar not having a great time at all. Now, it's just a theory, but I'm just putting it to you that this is the nature of the game. You get rotation, and look, if you're a large investor and you're looking to find a home from gold into Bitcoin, well, you've got the instruments to do it now, haven't you? You've got spot ETFs all over the place. You've got CME futures. You've got plenty of options. You can play that game if you want, and if you want to play that game, you're fine to play it. So look, I think there's a good argument for that, and relatively good chart as well. So that is that. There is no more to say about it. I'm going to leave it with you there. A bit of food for thought. The charts are good. The environment is different. The weekend is crypto's playground, and we should be seeing a retest of this area and then continuation at least to this next level of resistance towards 100, that kind of area. So a small move for crypto. It's not, what do I always say? It's not the those are not the crypto gains your granddad spoke about back in the olden days. It's not, but it's a setup all the same. So I'll leave it with you there. Thank you for watching. Hope you have a nice day. Maybe I'll see you on the Patreon. There's a link in the description below, and we'll be doing the next stream on Sunday evening. Take care.